if you're the type who prides themselves on being different, then you might want to consider avoiding Tesla, as it's the most overbought stock on Wall Street right now.
The technical metric, which is often talked about on CNBC as RSI, the Relative Strength Index, measures the speed and magnitude of recent price moves. So if an RSI is above 70, it's considered overbought. If it's below 30, it's oversold. So you want to be between that 30-70 range. More importantly, though, it can indicate a security may be ready for a reversal in price. And that's why we talk about it. So Tesla's RSI, for example, is well over 90 right now. That stock is up, over 25% in the last 3 weeks or so, and is on par right now to have a 12-day up streak.
And it actually did. Tesla stock is up again.
Meta is at 74 RSI, signaling that the stock is more crowded than Apple, Amazon, Netflix. Even Nvidia is lower on the RSI scale, despite its 165% run-up year to date.
Well, let's put things in perspective. Check this out. This is, of course, Tesla stock right here. And over here, we got the RSI indicator. And back in 2019, in July, it was over 70 or just around there. And of course, if you bought Tesla stock back then, you would have lost a lot of money. If you shorted Tesla stock, you would have lost a lot of money. And closer to the end of 2019, RSI was touching 80 a few times, and obviously you would have also lost a lot of money because you would have bought Tesla stock maybe as high as $60 per share for one brief moment if you were super unlucky and you bought at the highest point, which really looks like a super low point because I can barely even see it on the chart here. If I just go forward a little bit, and I believe we will see another huge rise for Tesla stock. So if you are a long-term investor, it doesn't really matter. But if you are trying to make a better entrance, can this help? Well, let's see for ourselves. So if we go back to 2011, I want to find every time basically when the stock dropped to under 30 RSI, and back in 2011 it did for a brief moment, and then the stock didn't really go below this point, which was about $1.50. It sort of went just a little bit lower here, and then it was a bit lower here, but it never really went much lower really. And we got another time here when RSI dropped below 30. This time it is at 23.5, and this would have been a great entrance, 150, and then immediately the stock goes up to $2.50 roughly. And by the way, you can see the RSI score right here as I go over the stock, and here RSI number dropped to under 30 again, and this was at $8 per share, and it would have been a great entrance. You enter right here, and then you are always in the green going forward. Here in 2014, it was almost under 30 RSI. Not quite, but almost, and the stock did go up initially, only to go down later. So you bought at about $15, and then you have a tiny little loss here for a while. But later the stock does drop lower. So right here, it went under $10. So you would be, in theory, losing money, but only if you panic sold. If you kept that stock, you would have made a lot of money. And here's a more recent example where RSI was at 24.5, and that was at $200. And then, of course, we know Tesla stock went down quite a bit, but it has now recovered. But I also have to say this, if you don't buy Tesla stock when RSI supposedly is way too high, for example, like here in 2013 when RSI was at 80 and Tesla stock was just at $4.60, well, the stock kept going up and you would have missed out on big gains. If you would have waited for RSI to drop under 30, you would have then entered the stock at $8 instead of $4.50. So just because RSI is high, it does not mean it's a bad idea to buy the stock. But there have been plenty of times when RSI went to over 80, let's say, for example, here in 2010, and then the stock dropped from 230 to about 150. And right here, RSI was over 80 for one moment, 81. And the stock was at almost $19, and then the stock did drop down to as low as $9.50 in 2016. In a more recent example here, RSI was at 94 and Tesla stock was at $400, and you would still be a little bit in red if you bought that high, but I don't think that is going to last. At some point, I believe Tesla stock will turn around and we will have a huge run up again. Of course, that may take years, although some think it may be happening very soon. I hope Tesla stock stays low for an extended period of time so that I can keep buying at these lower prices. I know I look happy, but secretly I'm a bit sad inside that I can't keep buying Tesla stock at these low prices. It's still way undervalued, I think, though. But I liked buying it a lot more at $109.10. That day, I remember Tesla stock dropped over 11% in one day and people were losing their minds. And maybe you could say I was losing my mind as well over how cheap Tesla stock was that day. However, here's something that's interesting. Back in 2016, our RSI dropped to under 20 and then the stock pretty much immediately doubled. And we all remember this last December, RSI also did drop under 20, and we know that Tesla stock went up a lot very fast, basically sort of doubling also. So if you do believe in stock astrology, looking at RSI may not be a terrible idea. But I personally don't buy on technical indicators, I buy on fundamentals. The fundamentals of Tesla stock right now look pretty good to me long term. But what is really exciting to many stock astrologists is that Tesla just clearly broke through this downward trend and we are clearly now above that line. Relatively speaking, compared to where Tesla was before, it's still not all that high. I mean, just a year ago I said most likely it actually will drop further. That was back in August when Tesla stock was $300 split adjusted. In the long term, I think right now Tesla stock is still a phenomenal deal. In the short term, if I was a trader, I would be just a little bit more careful. I mean, back in December, the opportunity was just so ridiculously obvious. Most of the times when Tesla stock dropped earlier, I just made a video. It's a buying opportunity, and guess what? It was. So if you bought Tesla stock earlier, congratulations to you. If you haven't, I think the opportunity is still here. It's absolutely massive. Just instead of doubling your money within months or getting a 50% return within months, you may need to wait a little bit longer now, unless Tesla does something crazy well. For example, the Cybertruck is launched and we learned that the price is good and the margins are crazy. Or Tesla could also just do a crazy advertising campaign and let's say that works and the backlog comes back and Tesla increases prices. The margins then go up and then Tesla stock also goes up. The reveal of a next generation vehicle could also be a huge catalyst. Wall Street still has not realized how big the energy storage business is going to be. So any one of these things could really drive Tesla stock very high up and very quickly too. What we had back in December was unique because even analysts were saying Tesla stock is just way undervalued. For example, Morgan Stanley said that stock right now is unfairly valued. It's insane. But let's see how long this run lasts. We just had another day where Tesla closed higher again. The stock has just been going up and up and up and up and up and up and up. One reason for that today is Tesla stock got a rating upgrade from one firm. Let's take a look at that.
We do have KGI Securities upgrading Tesla to an outperform from neutral with a price target of $335 per share. They are seeing that the U.S. investments that Tesla has made over the last couple of years are starting to bear fruit. In 2023, they also believe that they are going to be one of the biggest beneficiaries of the Inflation Reduction Act and the federal funding for EV charging infrastructure here. We talked about the tax credits at $7,500 tax credit that's available for every Model 3 and Model Y. And we also have a scenario where they are going to receive production tax credits as well for battery operations here in the United States and in North America. They also believe that it is an AI play. We've heard Elon talk about their AI stance for a very long time. Obviously, it's playing a role within their cars, but let's see if that's going to expand here in the near future. So that's really the bullishness that they're seeing at KGI Securities.
Not a single one of these reasons for their bullishness, by the way, is new. I bought Tesla stock in 2019 because I thought Tesla is an AI company, but now we are seeing analysts finally catch up to that as well. So if many more analysts jump on board, like in this case, they used to have a neutral rating and now it's outperformed. So before they wouldn't tell you buy a Tesla stock, but now they are saying buy a Tesla stock. So if we have a whole lot more of these, maybe this rally can still continue.
We also see that EV maker NIO also cut their prices over the weekend here on all of its new models. This one has caught my eye here, Oliver. They're going to cut the prices of 6 new models by $4,200. It's US dollars. It's going to be the equivalent of 30,000 yuan. It's a turn of events because the CEO actually stated earlier in April that they were not going to join this price war between Tesla and some of the other major players, but because gross margins were fairly low, but it looks like they now have to participate. So
that looks good for Tesla, although not so much for NIO. And in this video, I talk about why Tesla board members are not buying more Tesla stock. My name is Matt Post. Just like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.